welcome to the Comstock channel. My name is Brianne Hendrickson. I have Eric from Comstock Investments with me today. Welcome.
Yeah, thanks for having me, Brianne.
Thanks for being on. Grains are kind of struggling at the start of this week. Monday kind of seemed to be mixed. This morning seemed to be a little bit lower. What are some factors and why we're seeing this?
Yeah, so we just can't seem to buy any bullish reaction. It seems like everywhere you turn, you're seeing grains impacted by one bearish headline after another. A lot of influencing factors through this, but the major right now at this time being harvest is getting going. So as the combines roll, choppers are pretty well done with silage. A lot of people in the belt working earlage right now. Combines are setting up to roll, whether on corn or soybeans. A lot of these areas are going to see soybeans go first. So we have seen a little more weakness in the beans supply expectations. You get this glut of supply at harvest regardless. And so I think that's the biggest deal. But in addition to that, you've got a little bit of headlines coming out of the Black Sea regarding, I think 2 ships made it in to load out of Ukraine, and not a real situation there, but it's a headline and it got reacted to a little bit there, especially in the wheat market. So that's another thing. And then the Mississippi is probably one of the biggest off the burner a little bit, but still being talked about. Definitely going to affect basis, but barge rates are very high. Expectations of elevated exports until that situation is resolved are pretty low. So we got to make do with what we have for now. But all in all, the bearish factors outweigh the bullish for sure in both corn and soybeans. Although longer term, soybean picture is quite a bit different. So, we just got to bear with it. But even amid all of these bearish things, we do have corn showing some signs of life. We traded to new lows yesterday, and we've got a chart that'll show, 473.5 had been the support level and had been the low for, I think, 3 out of the last 6 weeks here. And we did break that down yesterday. We saw follow through to the downside today, but then we come back immediately and we're back up in the 475 area. So if we get back above 473.5 that quick and we can remain there, then not all is lost, and maybe we've got a little hope that we washed out the selling for the time being. So still something for the bulls to hang their hat on, but we got to see some other things moving in our favor as well.
Let's talk soybean. What are we seeing?
Yeah, so soybeans, again, the harvest pressure is heaviest on the beans because I think most are having to start with beans because they dried down so quick. And soybeans are so finite. There's just a brief window there. Once they start to dry down, you've got to get after them. When those leaves are gone, you'll start splitting pods and you'll get some crack situations going on where they won't get through the combine right. So you got to roll when it's time to roll on beans, and you've only got a few days to do so. So that's what's causing the pressure that we're seeing right now. And we'll see if we can find a bottom sooner than later. There's arguments to be made. Today's low 1308 in the November beans could hold. $13 would be psychological. You break that down and you're talking 1280 November. So need to see something pretty quick. A little bit of a bullish headline. We've got another ADM crush plant coming online along I-94 in North Dakota. They've actually started purchasing. That should help their local basis in that region. And that's the first of several that are slated to be finished over the next 8 months or so. We've already had a couple that have finished up, one down in Southeast Kansas in Cherryville. It's done. They've finished their hiring spree. They're buying beans. They're getting ready to start crushing as well as soon as harvest comes online here.
Let's talk about the winter on Friday, cattle. How are they doing so far this week?
So turnaround is sold off pretty hard yesterday. This morning, they were taking some of that back. But as we move through the mid-session today, we started to see a little more weakness here. That's a market that has every reason in the world to stay high, but needs corrections along the way. Traders have to trade. Markets need corrections. There needs to be some ebb and flow. And I think that's what we'll see. So far, we haven't seen a meaningful correction in this bull run in cattle. I'd say we're probably due for one. How long it lasts, how deep it goes, nobody knows, but that's kind of where we're setting up for right now. I thought last week kind of set up a perfect blow off top, particularly in the feeder cattle, but didn't see any signs that was the case just yet. So we'll have to see. We get another 1 or 2 down days, and that'll confirm, I think, that may be a short-term top.
Hitting a 13-month high, crude oil. What are your thoughts and opinions?
Yeah, so crude oil is watched very closely as a commodity in general. It's the largest market in all of commodities. So when it moves, commodities generally move as a blanket statement. Normally, we see direct impact to soybean oil and corn for renewable diesel and ethanol. This last couple of months, crude has completely detached itself from the grain markets. Ethanol margins are astronomical because corn has stayed cheap and getting cheaper, and crude has stayed high and getting higher. So, we go to look at the chart on the crude oil and looking at a weekly continuation chart, you can see that we've tried this area several times over the last year. And if we were to break out of this $93.50 area, that should see trade push up to 100 or even higher per barrel. So the stage is set for it. Now it's just a matter of whether traders can get a push and get it done or not.
Do you see this often closer to harvest, or is this kind of doesn't really happen often at all?
I don't know that I would say the timing is necessarily consistent. Typically, you would see your high in crude oil in the May-June timeframe when you get into peak travel and boating and air transport, ground transport, and recreational use are your peak usages for products, which then of course requires the most crude oil. So that's where you would normally see your high. It would be in that late spring, early summer timeframe. But it's not unprecedented to see a secondary high this time of year. It just happens that we were at lower prices then, and Russia and Saudi Arabia have continued their reduced production to keep this market well supported.
All right, that'll do it for this episode. Thanks for hopping on.
Yeah, thanks, Brian.
For premium content, you can head over to the Comstock Report, and don't forget to hit that subscribe button.